All right, thank you for staying with us. The Nigerian Export Processing Zones Authority signed a memorandum of understanding with the Federal Inland Revenue Service for effective administration of taxes in free trade zones. The FIRS said the importance of the agreement was to foster greater collaboration between the two agencies and ensure the effective administration of taxes applicable in operations of zones under Nigerian Export Processing Zones Authority. Let's discuss this more, and partner, Kristen Pedabo Professional Services, Mr. Fidelis Chuku, joins me via Zoom to continue this discussion. Thank you so much. It's good to have you on the program.
Hi, Tolu. Good afternoon.
Yes, it's good to have you on the other side today. When people talk about certain companies, of course, that are exempted from payment of tax in Nigeria, some of such companies are those operating in the special zones. Can you, in layman's language, explain what the special zones are and what they are called, why they are called special zones?
All right, thank you. Yeah, special zones really are zones established within the country, but they are deemed to be operating outside the country because of the nature of the law establishing them. You know, these special zones are created just to foster economic development, specifically for increasing foreign direct investment to the country. However, this zone is available to both domestic and foreign investors. But the main reason for creating these zones really is to, like I said, to foster economic development in terms of bringing foreign investment, increase production, reduce unemployment. Currently in Nigeria, we have about 42 of such zones, even though some of them are currently not operational, right? But these zones were created since some of them since 1992, when the Nigeria Export Processing Zones Act was enacted, and the government created that zone to be able to encourage investors to invest. And they are called special because most of the rules that are applicable to other businesses in terms of incorporations, in terms of taxes, levies, and all that, they have special rules for these zones, just to ensure that we don't have all these sort of bottlenecks that are applied to other businesses, just to make it friendly and attract investors. So that's the main reason why they are called special zones, because other rules that apply to other businesses don't apply to companies that operate in those zones. And basically, they are just created just to operate, but they are seen as foreign companies, even though they operate within the boundaries of Nigeria.
Interesting stuff. Well, from your explanation, are you saying that these companies in those special zones don't pay tax at all?
Yeah, the law establishing this zone, which is the NEPZA, the Nigeria Export Processing Zone Act, actually exempts companies operating in that zone from payment of taxes, levies, and any other form of duties or rates within Nigeria. Right, in under section 8 of that act, it specifically stated that they are exempted from both federal, state, and other government taxes. So they don't pay tax on their income generated from activities that they are approved to carry on within that zone, right? When a company is registered in the zone, in that free trade zone, right, they register to carry on a particular business, and whatever income they generate from that business, they are not liable to pay tax on such income. However, there are other entities that operate within that zone. So we have two classes of entities within the zone. We have the approved enterprise, and of course, we have the unapproved enterprise. The approved enterprise are those that they got the required licenses and the approvals to operate within the zone. For those specific types of companies, whatever income they generate within that zone, they are not expected to pay tax on it, including custom duties, value-added tax, and whatever. They are totally exempted. But for those that operate within the zone but classify as unapproved, those ones we need to pay tax on income generated, even though they still operate within the same zone. So in a nutshell, approved entities are exempted from payment of tax on their income from the zone.
Well, that speaks it out. Now, FRS recently signed an MoU with NEPZA, which is the regulator of these special zones. And of course, many believe that the aim of signing the MoU is to help FRS in achieving its ambitious targets for 2024. Now, what is the MoU about in your explanation?
Right. You know, I did mention that companies in these zones that they are exempted from payment of tax and all other duties and all that. And because of that, companies in that zone in the past, they don't bother to, in terms of compliance obligations regarding to taxation in Nigeria, they are not bothered because they are exempted from tax. Right. And prior to 2021, companies in that zone, they are only the only reporting line they have really is to make returns and some other. They are answerable to just the authority. They are not expected to submit any returns to FIRS or whatever agency. And remember again, I did mention that the zone is called special because they are not expected to be bothered with all these regulatory compliance issue. But in 2021, the act establishing this zone, which is the NEPZA, section 18 of that act was amended. And further to that amendment, the companies in that zones were not required to submit tax returns to FIRS. But since that 2021, nothing or much has been done regarding compliance by these entities. And the reason being that, if I don't have tax to pay, and because of the nature of the area they operate, why should I file returns? And again, who do I submit the returns to and all that? So that's been issue between FIRS and the authority, again, and the companies operating within that zone. But in order just to ensure compliance by these entities, so FIRS and the authority recently now entered into a memorandum of understanding by coming up with specific guidelines on how to ensure that these companies in the zone comply with these compliance obligations are provided in all the relevant tax laws. Not that they will pay tax, of course, they are still exempted from payment of tax, but they are only required to just submit their tax returns, submit their financial statements, and all that. And of course, this information are required for national data, right? And then the memorandum of understanding of the guideline issued by FIRS and the authority is just to provide the clarifications and guidelines as to the compliance obligations of these companies that are operating within that zone. So what they have done, or FIRS has done, the authority is to state that the authorities or the companies in that zone are required to submit tax returns, which is made up of their financial statement and the rest. And of course, the other thing that has happened now is that even though these companies are not expected to pay tax, they've now been appointed as agents of tax collection, right? And considering that these companies will be dealing with both unapproved entities within the zone, as well as companies that are operating in the custom territories and even non-resident companies. And those companies have tax obligations, right? So what FIRS and the authority has done now is to provide the guideline as to how the companies in the zone will now operate, which means even though you are not required to pay tax, they are expected to charge VAT when they supply goods to customers in the custom territory. And of course, when customers from the custom territory or non-residents service providers render service to these companies in the special zones, they are now expected to deduct withholding tax from payments made to those companies for their services. So that's basically what they have done. Of course, the guideline again, or the MoU between the two agencies, have not removed that tax incentive granted to these companies operating in that zone. They still enjoy the tax incentive, just that there is now an obligation on them to act as agent of tax collection, and of course, to then make a submission to FIRS as regard their operation in that zone.
So the companies will start to pay tax. I just want clarity on that.
Not really. They are not expected to pay tax.
Okay.
Right? So long as the company still hold a valid license to operate in that zone, they will still continue to enjoy exemption on their revenue from that zone.
Finally, does this MOU have any implications for companies and investors in the special zone?
Yeah, yes, it does. It does. Of course, when you are expected to comply with certain regulatory obligation, that then means that, of course, you need to do more work. You probably, by then, they need to get a desk in their office that will then manage their tax affairs, which means more work for them in terms of filing those returns. And of course, their agency role, since they have now been appointed to act as agents of tax collection, they are now expected to charge VAT, withholding, deduct withholding tax, and the rest. And for investors, really, because before now, because these companies are exempted from payment of tax, they don't bother, nobody cares about when they make distribution. And let me just state that the law that established those zones really only exempts the company and not the people that are rendering services to them or the investors, right? And of course, when they make profit, they will make distributions. And when people supply goods or services, they will also be implemented there. So what this guideline has done now is, number one, there is clarity in terms of state that exemption from tax. But of course, for the investors, for instance, when the company is making distribution of dividend, or they are paying interest on a loan, for the capital employed to operate in the zone. And of course, for service providers, they will now suffer tax on those incomes. Because before now, the companies in the zone, they've not been deducting withholding tax from payments to those entities. But going forward now, they are expected to begin to deduct withholding tax. And in general, really, this guideline and this MOU between the agency, if well implemented, really is expected to increase the tax revenue and, of course, bring more people to the tax net. Because people that are, for instance, non-resident companies that have been rendering services to companies within that zone before now, some of them, they don't pay any tax on those income. But going forward now with this guideline, since the companies we start deducting and withholding tax from them. So the tax revenue is expected to increase. And of course, it also means that we'll be able to have a more accurate data in terms of tax information regarding how much waiver are you actually granting in terms of tax, because whatever income that those people in the zone are generating, they are not paying any tax on it. And of course, for national statistics, they are supposed to be available information on some of those things, which FIRS will now begin to collate those information. So it has implication really for both, especially for the investors and service providers in the zone.
I'm excited that will help FIRS generate some more funds. Let's see how all of this plays out. And thank you so much for educating us on this development. The clarity really makes more sense about this agreement. I've been talking to partner Creston Pedabo Professional Services, Mr. Fidelis Chukwu. Thank you so much and have a great weekend.
Thank you, Tolu. Thank you. Nice day.